And Wedbush Securities Vice President of Equity Research, Alicia Reese. Alicia, it's great to have you on here. Did it change the story? Look, the market had already kind of migrated back into Netflix, believing perhaps subscriber trends were going to be a little firmer, perhaps happy about things like, getting pricing for shared passwords and things like that. At this level, at this valuation, what's your current view on whether the growth can support it?
Yeah, we're still very positive on Netflix. We think there are a lot of growth drivers ahead. Just 2 months out of the gate, I think they really started well with the ad-supported tier offering. There was clearly a lot of uptake. I think we learned 2 really positive things from Netflix, that there was, a low trade down from the premium tiers. And, I think what we saw is that with those high subscriber numbers, that there was a lot of retention. People, instead of going to trade down to the ad-supported tier, what we were seeing is they kept the tiers that they had. And if they were already going to cancel, they opted for the ad tier instead. So it really kept a lot of that churn, those subscribers on the service. The issue I'd say right early on is that the ARPU is quite low, but that's going to rise over time. So we're really positive about that as subscriber growth continues. ARPU starts growing, and then they have the password crackdown coming, and that's going to drive ARPU higher as well.
It seems at this point, at this level, based on the earnings run rate that we're at right now, you're clearly paying a premium for what you would anticipate to be future reliable growth. I'm reminded a little bit of the cable companies, not the cable networks, but the cable providers, in the first couple of generations or generation after they came public. And they were chronically unprofitable. They had a lot of debt. They were spending a lot on CapEx, but they were growing to basically have full penetration. And then they could raise prices every year. Once they had people subscribing, there was very low churn. How far are we off from Netflix actually delivering something like that, where it's going to show up in a big way on the bottom line?
I think we're there now. That's the turning point where we are now, where I think this is a really positive story, a really interesting story, is that this is the first year that they posted a huge free cash flow number. They had 1.6 billion in free cash flow in 22, and they're guiding for over 3 billion in 23. And I think that grows by about $1 billion a year going forward. They've just found a way to be more productive with their content spending. They're bringing in content, showing content globally from around the world. Korea's putting out great content. The UK. There are lots of different areas where they could make their original content more productive. And because they have so much original content now, they're able to play with that a lot more, and they're just really a global player in this content market now, so they have a lot more leverage than they used to, and they can drive all of that to the bottom line.
Okay, yeah, it'll have to be the case for $150 billion market cap. See how much the free cash flow can start to come through. Alicia, great to catch up with you. Thank you so much.